What's going on, everybody? You know who it is. This is Austin, aka More Than an Agent, and this is another episode of the Real Estate Blueprint podcast here with my Dominicano hermano, Jonathan Soto. Soto, what's up, baby?
Hey, what's going on, man? I'm excited for this episode today, man. We're going to cover a lot of interesting topics, so I'm very excited for this episode.
Yeah, man, this is one of the most underrated topics until you're in that situation. And I've already been in that situation, which we'll get into in a second with today's guest. But a little bit of housekeeping before today's episode. For everybody listening, please take 3 seconds to like and subscribe to the show, to the Real Estate Blueprint podcast, so that way you are the first to know every time we drop an episode. We'll greatly appreciate that. Please don't forget to leave a rating and review. That's how we are able to expand our platform and keep things moving, so that way we're able to share the sugar, share the wealth. Obviously, we definitely, with our event coming up, Wine and Real Estate, please click that link in our bios and our social media bios and Instagram bios. Grab your tickets. It's gonna be an awesome event. We're gonna be hosting it panel style. Would love to see how we're talking everything from what's going on in the markets, real estate investing, Section 8, Airbnb, the whole kit and boodle. Bring your questions, and we're gonna be good to go. Today's guest is a very special guest, especially for me. It's a really close brother of mine. Especially shout out to the Frat Phi Beta Sigma, and in this case, my go-to. Throw it up, man. Throwing the funk up and everything. Today's guest has handled, I would say, probably about 4 of my properties alone. It's my first call, my go-to, and really building a solid brand with his team over at Liberty Mutual. They're doing some amazing things, and he really has just the knack for tapping into people, making sure that everybody knows and has everything that they need for the best service provided. And as we can see, we can go through all the awards that's on his wall in a second. But ladies and gentlemen, a really close friend of mine, Jonathan Scott of Liberty Mutual. Jonathan, thanks for coming on the show, brother.
Thanks for having me. I think this is the best trifecta when you're looking to purchase a house, right? One of the biggest purchases we'll have in our life, or get that real estate investment. You need to talk to the 3 of us, right? You help them find that perfect house, right neighborhood, make sure they know, hey, the train is down the street. Jonathan helps them with the financing, and then I help make sure that they protect that asset.
Bingo.
That's it.
Episode's over.
I was about to say, episode over. Thank y'all for tuning into the Real Estate Blueprint podcast. But yeah, I want to dive into this because and obviously, again, it's not until once individuals have started to go on this trajectory and path of building wealth, whether it's through real estate, whether it's through stocks, whether it's through whatever else that you're investing in, or maybe you just you're looking at your 401k and everything's starting to stack up. You come to realize that at some point, wealth protection and preservation definitely becomes a major factor, and we're going to talk about that in a second. But to start off, one, like, how did you get into the insurance business on the sales side? Like, how did you get into that to begin with?
So I love selling. I have a knack for selling, but I accidentally tripped into insurance, right? So I was a project manager with another company, and the writing was on the wall that they were going to lay our department off, right? And I'm I'll get you before you get me. So I started interviewing. And I walked into the office, and the branch manager, I honestly just showed up to practice my interviewing skills, right? The branch manager started showing me some checks. And I'm like, man. And people who look like us, who look like me in the industry, they all trip into it. But there's a lot of money in insurance. And I like to say we're like doctors, right? So I know when I schedule my physical, it's not around the holidays, because I don't want to hear that I gained weight. I don't want to hear about my blood or my cholesterol, right? So I try and go when everything's easy peasy. I'll be on a water detox like a week before I go. But we do the same thing, right? The doctor gives you the information that you may not want to hear, right? Like, hey, your weight is up a little bit. Let's keep that down. Your sugar, whatever. We do the same thing when we look at your coverages. And what's so important on having a dedicated insurance rep or someone who's really going to care about you is, if you look at all the advertising that's out there, right? They talk about 2 things. How fast can I get it to you, and how cheap can I get it to you for, right? You can buy some cheap shoes, or you could buy some more expensive shoes. Those cheap shoes you will replace, right? A couple of weeks, next month. Those more expensive shoes, you can have those for a couple of seasons. So it's really about the asset and understanding your coverages, right? So I always tell my customers when I was telling more, I can't hide behind a 1-800 number. Everyone got my cell phone number. You're coming directly to me, right? So how I got into it, I tripped into it. I love talking to people. And the biggest thing is I like educating people, because on your auto insurance, on your home insurance, people have no idea what those numbers mean, right? They just see the monthly premium and they like yes or no off that.
Right.
In a lot of ways you get that down is they take things away from you. So if you're paying less, but getting less, then that's not cheaper, right? You're paying for less.
Right.
So it's
You're
about
more
the
expensive.
coverage.
And it winds up being more expensive in the long run.
In the long run, yes.
Yeah, so let's talk about coverage. Let's try to focus on the homeowner insurance for this episode itself. Of course, there's other insurance that you cover, but I want to focus on the insurance. What do you think it's a must to have for insurance? Let's talk about single families and multifamily, because a lot of our listeners focus on the multifamily space.
So the first thing a lot of people skip over is your liability portion, right? And that's if someone sues you. So they're like, well, no one comes to my house. I hear that a lot. No one comes to my house. I don't have parties. I'm good. What we don't understand is any lawsuit that happens outside of an automobile comes off your homeowner's insurance. The three of us are on the beach throwing a football around, right? My hand was wet, it slipped. You know, I hit an old lady in the back of her head or whatever, and she sues me, that comes off my homeowner's insurance. So liability is key, because anything that happens outside of an automobile comes off your homeowner's liability. So that's a big part of your protection right there. Especially if you own multiple homes, then you should have an umbrella, but that's another episode.
Yes, I definitely want to touch on umbrella at the end.
Yeah, that's not another episode. That's
another episode. This episode. So the reason it goes to your homeowner insurance, because is it the biggest asset you own, or what's the reason behind that, the liability piece, if you're in a beach and you're not extra in your house?
So let's say same scenario, right? And let's say I have a Canon, so I knocked her down. Her medical bills are not going to be cheap, right? So no one sues you for $10 or $20. They're coming for $100,000, $200,000, $1 million, and we don't have that liquid. So they go to, where is your liability line? And your liability outside of an automobile accident comes off your homeowner's insurance, right? So the funny thing is, to go from 100,000 to 500,000 might be $30 for the year, right? Or $40 for the year. So I'd rather have it, not need it, than need it, not have it, right? But yeah, so it just comes off your homeowner's insurance, because that's where you have that line, right? And then a lot of people say, well, it doesn't matter because I don't have much, right? And that's the younger population, like, I don't have much. And not yet, right? Your most valuable asset is your time, right? And your workability. And if someone sues you for $1 million, but you don't have $1 million today, they'll garnish your wages. They'll figure it out, right? You'll be on a payment plan for life to make sure you pay that off.
How often should people, go ahead.
No, go ahead.
How often should people review their policies? Let's say, like you mentioned, people don't have much now. Should they review their insurance policies, their homeowner insurance, their auto insurance on a yearly basis, 2 years? Well, what do you think?
So it depends. I would say every 3 to 5 years, because if you switch all the time, it gives you a bad insurance score, right? So insurance score is also the length of time you had with a carrier. But after too long with the carrier, you get put in a bad place. So every home has inflation protection, right? So we saw what happened this year. In 2021, you could buy 2x4s for like $4 or $5. Now they're like $8, $9. So if you think about insurance, if I insure your house, thinking that 2x4s are $4 or $5, but now they're almost double that cost, maybe there's not enough money in protection to rebuild your home. So insurance companies add inflation protection. That's why you'll see every year. You normally don't look at it because your taxes go up. So you notice that your mortgage goes up if you escrow because your taxes, but your homeowner's insurance will go up a little bit every year because your coverage increases.
Now, are you able to, okay, so say you don't own any homes, right?
Mm-hmm.
Are you able to get like personal, and because it's a topic that's not talked about, like, and this is why this episode is so amazing. I can't express that, but are you able to grab your own, like, just personal liability insurance?
So
like,
that would
if
be,
you didn't, go ahead.
So naturally, before we own our own home, right, we live with our parents. You live with your parents, then you go off your parents' homeowners insurance. When you rent, that's the importance of renters insurance, where people don't want to spend the $66 it costs for a year to have renters insurance, not realizing that they have liability coverage in the situation we talked about, right? Most of them start at 100,000. You also get loss of use. So if you think about it, if you rent an apartment before you go buy your home or your second home, right? But if you're renting an apartment, there's people beside you, below you, above you. So if they do something or start a fire and everyone has to leave, that loss of use will put you up in a hotel, pay for food, clothing, whatever you need, up to a dollar amount that's now not coming out of your pocket.
Interesting. I think it's okay. This, like that right there, to even to start off the show, because I want to talk about the umbrella policy. That in itself, because I'm gonna tie that into LLCs and so on and so forth. But that in itself, like I think, is one of the most. I mean, I would bet that 95% of the population like doesn't know that.
I didn't know it until I started selling insurance. So
I didn't know that until just 3 minutes ago. Right?
Like today years old.
Like today years old. And it's something that's so I mean, it's something, and I'm going to use the word basic, and the reason why I'm using basic is because it's so simple of a concept that, like, I mean, we're talking about hundreds and hundreds and hundreds of thousands of dollars that, you know, God forbid, if anything, and again, like you said, like you'd rather have it and not need it than vice versa. Like, I mean, my mind's blown off of that because I just didn't realize that if you don't have that in general, and this is how it ties into the whole like episode of like asset protection, number one, but also how assets protect you, like before you even like get to that point. Like, it's not even about like, you know, preserving the asset itself. The main asset is you, right? So it's so, I think that's profound.
And why, if you own a property, right, and you have renters in your property, you should mandate that they have renters insurance and put yourself as an additional insured. What that does for you as the landlord or property owner is, if they cancel their insurance, you get notified, right? Because if you own the home and I go into their home, I'm looking to sue somebody, right? So I even had a case where someone was like, am I covered? Because one of their tenants had a friend over and their friend was trying to say they slipped in the hallway and trying to sue them. And I'm like, no, that will come off their renter's insurance, right? Because you were visiting them. They were trying to say it happened in the hallway, but luckily there was cameras and it didn't happen. It seemed like it was a little bit of fraud that was taking place, but the homeowner was worried it could have been liable, but he also made sure all his tenants had renter's insurance. Like, if I'm visiting you and you rent, and I know you're multifamily homeowner, Austin, but if I visit you, right, and you were renting, I trip and fall, that liability should come off your renter's insurance. Because I mean,
so
your unit.
I'm gonna put this on blast. Here we go. Ready? So between Jonathan and I, what, like 35 units combined, about roughly 35, 38, whatever the case. How many of your tenants have renters insurance?
Man, putting it on blast.
Because I'm about to ask myself, like, how many?
I started that way. My very, very first tenant had renters insurance. My second tenant, same building, no renters insurance. I put it on the lease that is mandatory to have, but I don't follow up to make sure that they get it.
So if you put
so you
yourself,
actually have it in your lease. I'm ashamed.
Sorry, go ahead.
No, I'm ashamed. None of mine. Ironically, and obviously the building, and I'm in right now. Like, they required it. They was like, you can't even move in until you sign this and get renters insurance.
And the building that you're in now, they said put our name down, right, as an additional insured. And you had, so the onus is on the tenant, and then they just get notified if it's canceled.
That's so yes, because at one point they actually reached out to us. It was like, hey, like, for some reason, like, your policy is not intact. Like, what happened? It was like, oh, I don't know what the hell happened. Like, we didn't tell them to cancel it. So give me my put my $12 policy back on there. But that's okay.
I was gonna say a simplified renters could be like $66 for the whole year.
Right,
but it's really more. It's really more coverage in there for your tenants also, right? So if something was to happen in one of the units that another tenant did, and they had to I don't say move out, but they had to stay out for a couple of days while it got fixed, you would feel good knowing, hey, on that renter's insurance, you got $3,000 of loss of use to stay down the street in a hotel while this is taken care of. And whatever you use up to $3,000 for hotel, food, if you need new clothes, it's just covered through your.
But that goes through the tenant, no? Like that would come back to the tenant, no? I think he might be frozen.
Frozen, yeah. Should we pause it?
Yeah. All right, we're back. Okay, so in this particular case, right, like tenant stuff, let's say, tenants in their unit, something happens, pipe burst, small fire, whatever the case, they have to move out, they have to stay in a hotel, food, blah, blah, blah. The
Loss of use.
insurance carrier would give that, to the tenant, right, to the resident. Now, say, for example, same scenario, but now for whatever reason, they're trying to not pay rent, right? And they're like, hey, because we've been inconvenienced or whatever case, and let's say the tenant did it, right? But there's no way to prove that. But let's say the tenant did this or caused the fire, so on and so forth. Is there any recourse for the property owner through the tenant's renter's insurance?
Not through the tenants, but on your personal homeowner's insurance, right? You have loss of use as well. So what you would say is the house caught fire and I couldn't have tenants in there for 6 months. I lost X amount in rent, and then you would put that claim in for that.
Gotcha.
Is there a renter's insurance? Because I heard someone mention it before, but I think it's a specific company. It might not be insurance. Is there for loss of rent that if they lose their job or something, can the insurance pay for some of their rent? Or how is that something out there?
I don't know where you saw that, but I don't know anything about that. So
it's not renter's insurance. It was some type of program. Someone was telling me about that. It wasn't insurance.
I was about to say, because us landlords, while we go into this recession, we asking these questions like just in case. But that's important. I want to touch base off of the umbrella policy. Actually, I'll let Jonathan, two Jonathans, obviously, but I'll let Soto handle the umbrella policy. I just want to go back to coverage details really quickly, only because for the most part, like that lined item, right? And we got so sidetracked because it was so, it was so profound. But that main number is the liability, right? But give us other stuff that is protected, just so we have an idea of, what coverage and what is covered.
Perfect. So water backup, and there's a lot of houses in New Jersey with basements, right? And water backup is when your sump pump fails. So we could talk about Ida, and I feel good because all the people I write, when they call me like, am I covered? And I'm like, you're covered. But now there's water seepage. So then when you hear horror stories, online and in these news feeds, is because, again, people don't understand their coverage, right? So if your basement floods and it has nothing to do with your sump pump, if your sump pump's on the right side of your basement and all the water damage is on the left side, when the insurance company come out, they're like, clearly wasn't your sump pump. Maybe the patio that you built wasn't pitched right and all the water came in through a window, or seepage is when the block gets so wet that the water just seeps through. And that's not covered. That's only covered under flood insurance. Here's a cool takeaway. 2 years ago, so my team is actually directly appointed with about 10 other carriers as well. So we make sure that you get the best coverage at the right price, putting coverage first, obviously, right? But we also have a private flood insurance company, right? So a lot of people finishing their basements and they're not in a flood zone, but the lines are always changing, right? So like I have flood insurance on my house and it covers, I just care about the basement stuff, right? So I get $50,000 in personal property in my basement and it was like $350 a year. Again, rather pay for it that need it, not have it. So you don't want to be in line waiting for FEMA or trying to get one of those SBA loans. I know Ida is a sensitive subject and people are still recouping from that, but knowing that you could have had flood insurance for a cheaper price, right? Because you're not trying to cover the whole house, you're not in a flood zone, it's cheaper, you can get private flood insurance. again, something to look into, rather need it, not have it than have it, not need it, than need it, not have it. Sorry about that.
And I had to change that a lot because like now everybody's just asking about flood insurance and like how I'm advising clients, and it's just like, listen, like to be honest with you, hey, is this in the flood zone? Right. And how I'm advising clients is like, listen, like you might as well go get a quote because it's going to be way cheaper if you're not in a flood zone. And then for the extra, 15, 17, 40 bucks a month that you're adding, God forbid if anything happens, at least on the flood, because now we don't know what's going on. I heard there's like tornadoes down in South Jersey now and like all this other stuff. Like, I don't know what, like, you have no idea what natural disaster is going to happen. And obviously God's pissed off with all of us considering everything that's been going on. So like in those cases, like gotta, it's just easier, especially if you're not in a flood zone. Like I'm just recommending it for everybody.
And here's one key thing to pay attention to. So our systems, they update on a quarterly basis, and we have what we call a replacement cost calculator. Soto knows what I'm talking about. And it takes your house, the square footage, and that's why I ask a lot of questions. Is your basement finished? Is it not? Is your garage built in? I'll even look on Zillow to make sure we have the accurate information because it builds out a price, right? So my office is in Warren, New Jersey. So there's a lot of $1 million high value homes over there. And they get offended when I say, okay, we're going to insure your house for $850,000. They're like, well, I bought this for 1.2 million. Great. You bought the neighborhood, the facade, the school district, the same 2x4s is going to cost to build your house over here.
Yeah.
It costs over here, and to build the house back costs this amount. But have people go through the replacement cost calculator, because when I sit down and I look at people's homeowners insurance and what they're offered, as an insurance provider, it's not ethical, but you can pull that down, right? So I can say, oh, you're buying a flipped house or a fixed me upper, and maybe you bought for $250, but at the end of renovation, it's going to be $500,000. You're coming in with granite this, soup and nuts, molding, whatever. If I insure it for the $200,000, and then something happens, the house burns down, when the $200,000 is gone, that's it. They're not going to give you any more, right? Mm-hmm. And on the flip side of that, there's 2 states where if something happens to your home, California is one, I can't think of the other one right now. But if something happens to your home, they say, do you want to check or do you want to rebuild your home, right? In the state of New Jersey, you have to rebuild your home. So if you will overinsure your home, right? Like, oh, $1 million sounds good, and you have a $300,000 home, you're just paying for coverage you'll never see. We can't make your home better, right? If you had carpet over there, we put carpet over there. If you had a window there, we put a window there. The only thing that gets better is we update your electrical, because we can't go put old electrical back in your house, and your windows, because those are new things, but the structure of your house is going to be the same.
Nice. And due to the weather changes and people putting more claims because of those weather changes, has the price of insurance gone up?
So I would say buckle up for renewals. I would say buckle up. So I actually had this conversation with my team. So all insurance is going to go up, right? So insurance prices are set through the Department of Banking and Insurance, which is, mandated by New Jersey, and the governor appoints that person, and they want to get reelected, all this good stuff. So when COVID happened, I'm just talking to auto quickly. A lot of us got refund checks from our insurance company, right? They're like, oh, no one's driving, give back checks. All right, so we gave back checks. But in the interim of this, we took in less money, but it's more expensive to fix cars, right? There's the chip shortage, which caused the part shortage. So we're spending more money. So now, because they were proactive on getting everyone money back, but they're not reactive on letting us increase rates, every insurance carrier just went and put in for a rate increase in the state of New Jersey because we're losing money, right? And you think, hey, I didn't get into an accident, but there's a study and a graph, and over, I think it was like a 5-year span, the cost of an accident went up about $500. Between 2020 and 2022, the cost of accident went up $2,500 because of the shortage, because of the rental car reimbursement, the waiting period. So it cost us a lot more to fix these cars now. Then when COVID happened too, there was less people on the road, so people started driving faster, right? So that little fender bender now became 2 total vehicles. So all these things we have to take into account. So I had a conversation with my team the other day. When you get your renewal, if your renewal's more expensive, and you call your insurance provider, don't accept less coverage, right? Because I know the tricks. They're gonna say, well, if we increase your deductible to $1,000, when the reality of the situation is, if you're complaining about the gas going up, right? Can you pay extra $500, God forbid, if you got into an accident? Would that put you in a hardship, right? So be mindful, understand the changes that are being made. Am I getting less, which is bringing my premium down, or are you shopping me around, like I said, myself and my team, we're pointing to another carrier so we can shop you around to see where you're the best fit. But just make sure you're not getting less, because I know there's going to be a lot of phone calls, and I was prepping my team on it. Maybe $1,000 deductible makes sense for you, right? I work from home all the time now. I'm not driving to the office. I'm willing to take on that risk, and I have extra $500 sitting in my savings account.
Okay.
Right? Then that's a conversation you have to have, though.
Gotcha. Okay. So this is, I think, a perfect segue to the next question. Once you start owning properties, let's say you go into an incident and whatever happens, you don't have enough coverage. Can you get a coverage on top of the coverage, which I believe is umbrella, but I would love for you to explain that. When should people get umbrella, and what are the criteria? Because I know you have to have certain criteria with your car, with your house. You have to have certain coverage before you get umbrella.
That's correct. So on your homeowner's insurance, you have to at least have $100,000 worth of coverage. And on your auto, you have to have 250, 500, or 300,000 blanket. But it's an additional $1 million, but it doesn't kick in until that level. That's why. So if you had zero liability on your home, you would be responsible for the first 100,000, and then the umbrella kicks in. Why the umbrella is so important is there was a study. I don't remember where the article was. You have to Google it, try and figure it out. But more millennials, right, are being in the jury pools now. And they're like, well, when you go to jury or you go to court, they're like, what coverage does the person have? And when they understand your coverage, they're giving the max limits of liability, right? Or overextending that. So that's why it's super important to have that umbrella policy, because you get the additional $1 million of protection, right? Again, we think, oh, I'm young, I don't have that much yet, right? But when you own several properties, they could come after your properties. You don't have to sell one of the properties you work so hard for to pay someone some debt, right? And then, you know, like the game of Monopoly, when you start flipping over those cards, you don't get that whole resale value, right? You're going to get your profit margin. So now you work hard to build a portfolio of homes. But if, you know, they're not all liquid, you're going to have to sell more homes than you intend to pay off that debt. Or you have your wages garnished, which is going to change your style of living. So the umbrella policy gives you an overarching, just like when you go outside in the rain, you have an umbrella. So over your home and your auto, you have an additional $1 million. Besides the auto commercials, right, for the insurance, you also see all the lawyer commercials. Have a slip and fall, Action Network, right? All those commercials, call me, they got these cool little jingles. They don't do that out of the kindness of their heart, right? If you have a lawyer and you go to court and you win a settlement, lawyers get 1/3 of what you take.
Is that only for liability? That umbrella is a $1 million liability, or what is the actual coverage?
It's that liability coverage, but the liability coverage is what's going to protect your assets, your 401k, your wages. And as you own more properties, you have more to lose, right? Because again, you could be in an auto accident. You have all these properties, and I see it sometimes now. People are driving around with state minimums, and they have a lot of properties. If you crash into my car, right? Right, let me get, and I'm be the owner of those new properties, because your state minimums, the insurance company, we have lawyers on retainer, right? But if you're driving with 1530, which means if you get an accident with one person, you paid out 15,000, two or more, 30,000. It's cheaper for me to cut the check and be like, there's my portion, you figure out the rest. And if you truly hurt someone, right? You hurt a surgeon who's new in his career, making $200,000 a year, and you break his hand and now he can't create surgery anymore. He's gonna say, well, I have 20 more years of working, right? $200,000 a year plus inflation. That's what I'm suing you for.
Oh my God. All right. So, all right. And Sonia was answering, and I just want to go back. Okay. So say if you have, you have two properties, one has 500, the other one has 500, liability. If something happens and, medical bills equate to 750,000, can they take the 500 from one property and then take the other 250 from the other property?
The 500 on that house is for that house.
Just for that house. And the only way that you can have any type of buffer or coverage under that is with the umbrella policy.
The umbrella policy is overarching your automobile, and all your properties are under one umbrella with an extra $1 million. So the 500,000 you have plus the million, so you'd have 1.5 million.
And you can't do it without the auto. You have to have the auto.
It depends. There's like a carrier we partner with that they'll do it without the auto. They'll even do it if you have 100, 300. But most accidents, if you think about it, when people get sued, it's from an automobile accident, and that automobile accident is still going to have exposure to your properties because they're your
Right.
asset, right? So that's why they want to make sure you have those higher liability limits, and the umbrella covers all of that, the auto and the home.
I got to review my policy.
Yes,
I
you
know
do.
a guy.
I have a few questions. Two-part question. How much is $1 million policies? I'll let you answer that one first before I go to the next one.
So that also depends on your risk, right? So they look at what's your driving record, what's your claims, but I would say on average, you're looking at like $300, $400 for the year.
For a year.
For the year.
And
So
you can get more, not just $1 million. You could do 3 million, 5 million, right?
You can do, yes. So some of those customers, they're like, my financial planner told me to get $5 million. I'm like, all right, right, big dog here. But you know, you just want to make sure that you're protected, and they don't want to come for what you have liquid. I'll give you another scenario. So I personally have an umbrella, and I just upped it to 2 million because I'm putting a pool in my backyard, right? And no lifeguard on duty, but things happen. You open yourself up to other exposure. I hope to God that nothing ever happens in my pool, but if it does, you know, that's a liability waiting to happen.
I got a pool, so you're saying I should up my umbrella because I have $1 million coverage. Should I up it to 2?
I'd rather be safe than sorry, right? People pulling on the heartstrings, and you weren't watching, so listen.
I have a deep end. I have like a 12-foot deep end.
What kind of where's your house at?
Morris County.
Olympic pool back there?
Listen, man.
All right, second part to my question. We can talk about where I live after. So
coming over.
The big debate. So when people own property under LLCs, different LLCs.
That was going to be my question. Oh, beautiful. Thank you. Go ahead. That was going to be my next question. Go ahead.
On the property under LLCs versus umbrella, what do you recommend? What's beneficial for each? I know it varies in each scenario. I think sometimes it's better for LLCs, sometimes better for umbrella. But once you have properties in different LLCs, umbrella doesn't work, right? Because it's different entities. But I want you to answer that.
Yeah, sorry to put it. But to piggyback off that, the reason why this question is so important is because most people think that once they go into an LLC, that's it. Like they're just completely protected, and it's a common misconception that like if the LLC goes down, they can still come after you, like they come after your stuff. So yes, so run us through.
So the LLC is a right when you have multiple properties is a great way to protect yourself, but if that one property or that LLC was sued for $1 million, that LLC still has to come up with $1 million to just insulate your other properties, and it insulates you better, right? But there's always, if there's a will, there's a way, right? And I'm trying to think if there's a parent LLC, right? So if you had, Austin Smith Real Estate LLC, and then you had LLCs underneath it, like 123 Broadway, 145, the name of your properties, I believe the parent can have the umbrella, which protects all the properties that go underneath it. So that's the way around, if you have multiple properties, having the parent LLC and then just little LLCs underneath it to have the umbrella policy, versus if you have 10 properties in 10 different LLCs, you potentially need 10 different umbrellas.
Okay, so all right, so LLCs normally majority the LLC or just that one LLC, you can only have that one umbrella policy on that one LLC?
Because you're saying that this is a limited liability, right? So why am I going to protect this LLC and that LLC under the same umbrella, right? But if you have a parent corporation or right, a parent company there, and then all the LLCs underneath it, it'll protect the parent, which then protects all the LLCs. And you still get the double inflation or protection there.
Yeah, that makes sense. It's like me owning property, you owning property. We're separate people. LLCs are separate entities, so they can't have the same umbrella policy.
But okay, the just before as we just kind of like to start our descent here, bring us through right before we go into the core four here. Give us a couple just, and the reason why, because I like it wasn't until like you have to literally pick up the phone where you either made a good decision by getting proper coverage in the past, or you're gonna find out like right on that phone call when something happens, what you're gonna be facing. And for example, Jonathan was talking about like sewage. I had one property in which the main sewer line in the street actually backed up and it came into the house. And I was like, yeah, like shit, what are people gonna do about that? And literally, it was shit. Literally. You should hear one of my tenants, like, and she doesn't speak the best English, so she like, yo, the caca. Like, so, long story short, called, put the insurance claim through, and here's the funny story. The funny story was right before I closed on that property, I was given the option. And Jonathan, I did come to you first on that property, like I do always, but we couldn't hit on that one. That's okay, because Jonathan redeemed himself on the property that I just bought in March. I had to double take at the numbers, make sure. Matter of fact, I got to look at that policy, make sure I ain't just got 100,000 in liability. That insurance that coverage was so cheap. But I know, luckily, I know I'm always in amazing hands. I know you would never set me up with no BS policy. So, but it's funny. So, going back to the story, right before I closed on the property I bought in 2020, the individual asked me like, "Hey, do you want to add water and sewer?" And I was like, "No, what's the difference, right?" And at that point, I think I was at around like 2,200 or so for the year. So he's like, "Do you want to add water and sewer?" And I'm like, well, what's the difference? Show me the numbers and the difference, right? And it wasn't that much, but honestly, because it wasn't that much, I almost was not about to go for it. At the very last minute, I'm like, you know what? Just add it on there. We'll be good. 2 months later, I get the call that my basement is flooded with sewer water. And, oh, crap.
Lost him.
All right, we'll be right back.
Yeah,
So, in that particular case, I once that happened, and once the backup, was coming in, it immediately hit me, and I'm like, I'm so happy that I just signed up for water and sewer. And if it wasn't water and sewer, it was like sewer backup or whatever that like line item. Yeah. So I called, everything like that. I had to pay for it up front, or I had to pay the deductible, and then they sent me a check and everything like that. But the funny part about it was that it happened twice. Within about a week and a half. So insurance basically told me that we got you, so on and so forth. Then it happened again. So like I was out of my deductible twice within like a week and a half. And then long story short, like I wound up getting all my money back just from insurance. But like I would have seriously just been out, I think at that point, how much was that? I would have been out $5,000 like that in a matter of just because I didn't want to pay an extra, I want to say it was like a difference of like maybe $22, $27. Right? Like I would have been out $5,000 of profits, like where even if the tenants, luckily those tenants, everybody like is a blessing, everybody pays on time. But it probably would have took 8 months out of the year just to recoup that. And then like on the profits on top. So all that to say that like, as far as like a wealth preservation, like give us maybe 1 or 2 other stories, just because I want to beat it into people's heads. Like this is so important. Give us 1 to 2 quick stories real quick. As we start our descent. Yeah, give us the worst. That one was worse. I was like, yo, what the hell is that? Like, we got 10 more in my give us 1 to 2, and then we'll start our descent into the core 4 here before we let you go.
All right, perfect. So the biggest thing I would say was with Ida with the water seepage. Right, I live in Woodbridge, so I'm in the Woodbridge Facebook community group, and you see people with water up to their basement doors, and and the way they bash the insurance companies, and it's really about knowledge, right? So I hold my team accountable, myself accountable, because I treat everyone as if, I'm on the phone with my mother, my father, my brother, my sister. That's how I want them to be treated. I'm treating you that same way. I'm not the fastest, but you're gonna know what coverage you have. Because at the same time, like I said earlier, you have my direct cell phone number. If you call me at 2 a.m, I'm like, you're covered, don't worry about it. Or I took a note, you said you didn't want that. Remember that $22 was more important for you, right? So that's important. But I would say with Ida, with just all the water backup, things that we don't know. So everyone's souping up their homes now. There's a case where someone got a patio, like I alluded to earlier, and the patio wasn't pitched correctly, right? And then the patio pulled up the water and the water went into the basement window. So obviously that's not covered at all under the insurance, right? So make sure when you get these estimates for this work and souping up your backyard, everything's above board. They're doing it right? But really, you know, I actually, here's a bad one. There was a house where someone did do that with the replacement cost, right? And they gave them less coverage, and with inflation and everything, their house burned down and there wasn't enough money to fix their house. So it's like, well, this is how much we can do for you. The rest is on you.
How does that work when they have a mortgage on that property, right? So house, okay, you know, house was, they paid for the house, it was 500 even, right? 500 even. And then, you know, by the time that the fire happened that burned the house down, they had only gotten through 100,000. So they still owe 400,000 on the mortgage, but they signed up, they didn't come to Jonathan, they got a BS policy, right? And then they only have 250,000 as a replacement cost. What happens in that scenario?
So mostly what the underwriters, right? And I don't work in that world, so correct me if I'm wrong, Jonathan, but they just want to make sure that the mortgage amount is covered, right? So they're not, which is silly if you think about it, because then they should want to say, can this house be rebuilt? But they just want to make sure that the money I lent you, I know I can get back.
Yeah.
So if you're taking out
dwelling part, yeah. Mm-hmm.
So is that please tell me he was freeze again. He did. And important. All right. So in that particular case, they just want to make sure that the mortgage can be taken care of, right? So say the underwriting, make sure that, you know, 250 will clear the mortgage. But you know, if there's, so it gets mortgage paid off first, obviously, most likely mortgage gets paid off first, and then whatever's left is what you're left to build with.
So in most instances, right, if your house burns down, the mortgage is trying to protect the asset, so they want the house rebuilt. The insurance company has to rebuild the house, but the mortgage company is like, if I'm giving you 200,000, I just want to make sure that my 200,000 is protected.
Gotcha.
So we have the replacement cost calculator. There's been many times where, again, that person has that $1.2 million mortgage, and they be like, well, show me the replacement cost calculator, because if you can't guarantee the number on the paper, then I want to at least see that the house can be rebuilt. But it doesn't happen on the back.
Gotcha. Okay. Understood.
Right.
Okay. That makes sure.
And then the way that inflation, you know, like I said, in 2000, you could buy that 2x4 for $3 or $4, and now it's 9 or 10. So the way, like, we've never seen it jump this fast. So everyone's, you know, a little bit behind. So now would be a great time just to review your policy. Be like, hey, rerun me through that replacement cost calculator. Let me see what I look like, just to make sure.
All right.
That's going on.
But a lot of coverages, last thing, a lot of insurance companies do offer additional protection, right? And it's for a nominal cost. You can get extra 20, 25%. I always say go for the 25%. So in a situation like we're in now, if your insurance was a little bit less than it needed to be, you have that extra 25 for free.
Nice.
I just added to my to-do list just to review the insurance policies, because I wouldn't know off the top of my head, unfortunately. Okay, going into the core 4 questions that we ask each and every guest on the Real Estate Blueprint podcast as we start our descent here. Question number 1. And if you can answer it via real estate, cool. If not, we'll do it off the insurance. What's your favorite aspect about insurance? We're just going to keep it insurance.
You can ask me about real estate. I can.
All right. What's your favorite aspect about real estate?
Insurance is real estate, so.
So, you know, for me as a, you know, insurance consultant, people love to talk about their new home, right? I like to look on the Zillow and pull up the listings, and I'm like, oh, that kitchen looks nice. And they're like, oh, but I got to change the color. And they're just so excited about it that they don't mind being on the phone with you, right? Like I can be on the phone with 30, 45 minutes, and they're just walking me through the house, the design, and I'm running the numbers in the background, but it just helps, right? When you get to see people progressing in life, is an exciting time.
I love that.
Yes, I love that. Question number 2, what is your favorite business or personal development book?
So right now, I manage a team, right? So managing in a remote world, even though there's all these memes out there, like I save on gas, I'm more productive at home. You're really not. It depends on the job that you have, because there's a lot of osmosis that comes from team camaraderie, right? In my industry, it's a lot of it's a contact sport. So it's a lot of phone calls, right? Some rejection. And if you make 2 calls from home and then you're like, oh, well, what's for lunch? Or let me catch up on the Netflix and I'll get back to it. When you're in the office, you hear the next person having a good conversation, it drives you to pick up the phone, right? Yes. So one of my mentors in the business, he told me to read It's Your Ship. This is by Captain D. Michael Abenshop, I believe is how you say his last name. But he had the worst ship in the Navy, right? And he grew it to be the #1 ship in the, they don't rank him, but he claimed, self-proclaimed #1 ship in the Navy, but they were doing a lot of great things. And a lot of the tactics from his book, they roll over into business. So that's what I'm reading right now. I know that I can sell. I know that I can be consultative with my customers and policyholders, but making sure that my team has that as well as that tenacity to make that next call.
When you're question number 3, when you're not out saving people's entire like fortune like on a daily basis, what are some of the fun things that you like to do in your spare time?
Man, I have a 6-year-old. He's gonna be 7 on Juneteenth, actually. So this Sunday, Father's Day.
My young boy.
That's right. So he keeps me
Damn,
busy.
he's 6 years already. 6 years.
Well, he's about to be 7
Yeah,
on
that's
Sunday.
about right.
So
7,
he keeps me running and just seeing him smile, right? So it's funny. I'll have to quickly. So I look at my dad, and I'm like, "Who are you?" Right? Because he's not the dad that raised me. He's rolling on the floor with this guy and all that. And that to me is amazing because I didn't have that with my grandparents, right? So to see my son have that, it makes me want to be more involved. And sometimes the one thing that I took away from COVID is, life is precious, and this is what's key and what's important. Like money will always be there, right? Chasing the money, come home late, but coming home and making sure I spend time with him, right? Drop him off in school in the morning, every morning, because I want them to see, hey, his father's dropping him off at school, right? I'm at all the parent-teacher conferences, but just making sure, like, we're in the car setting up our afternoon. He thinks he's good at Mario Kart. I still get him though, and he's like, we gonna play, Nintendo Switch when I get home. I'm like, big boy, we play Nintendo Switch when you get home. So putting a smile on his face is what lights me up.
I love it. I love it.
I love that. I'll be there soon.
Last question. Last question. Where can people find you? I know you're not a huge Instagram person, but where can people find you?
I'm not a huge IG person, but I'm all over LinkedIn. And you guys can call me, text me, right? My number is really easy, 908-531-9700. And all the good sales books, you got to say your number twice, 908-531-9700. Call me, text me. I can text you a bookings link for myself or my team. I still roll up my sleeves, but we'll make sure that you have the right coverage. Insurance reviews are free, right? No obligation to you. And me and my team, we can shop you, like I said. So let us do all the legwork for you. You'll understand the coverage you have and make sure that your coverage is just right.
Nice. I
love that, man. This episode honestly is because usually people go after the section episodes, right? Like how to build a business from 0 doors to 400 doors in 2 years, right? And everybody will tap in and then won't do anything after, right? Like it's very, very weird. But like these are, and I like to, and I'll tell Soto every now and again, like there's some episodes where like me, where it becomes a little bit more personal, right? Because like it has become one of my favorite like topics, because again, like it's not until you're in that situation where you have to pick up the phone call and you're either going to be happy that you're picking up the call, or you're going to be like, damn, like what am I going to be in for? And again, like, I mean, as we continue to scale and as we continue to like excel in our ranks career-wise, professionally, we start to obtain a lot more. One of the most fundamental, just things of like just wealth building in general is just wealth preservation. So I greatly appreciate the time, and I greatly one last tidbit just off of Jonathan's just like demeanor. At one point, and it wasn't salesy at all, and it like he just caught me really early when people are not thinking about life insurance, right? And just putting it out there of like, listen, if you just do this, here's what it's going to turn into, right? And to be honest with you, just starting my business at that time, it was just cool to like be supportive of somebody else's business, right? Where, it was very easy to set up, and I just wanted to support somebody else's business. Like I wasn't honestly even like thinking about like the life insurance like aspect of it, because at that point I was like 25, right? So like you're not really focusing on that now. And it was just like, yo, that's my brother. I'm definitely going to support his business. But then when you step back at it and you're like, damn, I got a life insurance policy, $32 a month, right? And wifey has hers, like, we're pretty much the exact same thing, $30 a month. And then you see what you get. And it's mind boggling that, like, I'll leave you with this tidbit. For our community, the Black and Brown community, we can change our whole entire community's wealth if we sign up for between $32 and $60 or $75 a month, right? And like the one thing that's definitely guaranteed is that we're not going to make it out this life alive. I tried. I don't want to say I tried, but like I think it's like hard to say that we're going to be here forever. And that's one guarantee that like Jonathan says all the time, like we can't be using GoFundMe's anymore. We can't be doing fish fries anymore, right? Like the funeral costs, I don't think they're going down, right? And in this particular case, like for pennies, in theory, for pennies, and I love when Jonathan talks about it all the time, you insure your phone with no problem, but we'll insure your life. We got some priorities that we got to figure out, right? So all that to say that, yes, people need y'all to really, really pay attention, because it's not until what you see that you're getting on the back end. And when you start, the earlier, the better, when you don't have all these health elements, it's truly, 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 truly kind of mesmerizing. And I thank you for like putting it out there very, very early and getting me set up with that. Because again, like just as we go along, we don't realize how important insurance is until we're in that situation that we need it. So I
Too
appreciate
quick,
Go ahead. I know you want to. Go ahead.
You set me up. So
I know.
There's an amazing Yahoo article that just talks about that, right? And they have the statistics, and I might be off by 1% or 2%, but the African-American community is leading the way with 56% of our community has life insurance, right? Versus 48 is the national average. But 46% of us are underinsured. And the main reason is we say, all we want to do is pay for our funeral. Nobody left us anything. But that's not the way that we're going to move the needle forward. We can't go back in time and change redlining. We can't go back in time and change a lot of the practices, but we can create wealth generation through a life insurance policy to make sure the next generation is better than we were, right? And making sure we have enough insurance. It is a taboo topic, but COVID doesn't discriminate against your age, race, sexual orientation, and it cleaned out 1 million people in the US alone, 1 million plus, right? Rest in peace and condolences to everyone who lost someone, but that touched us close to home. And if you still can't sit here and realize that, man, this is not a forever thing, and I don't know what's going to happen tomorrow, shame on us. But same number, right? 908-531-9700. I'll give you a quote. It's great to lock in your rate at a younger age, because when you get older, it just gets more expensive. So if you wait till you retire and you're like, oh, now I'm 65 on a fixed income, right? And what are you going to stop eating lunch so you can pay for that life insurance that now is going to cost you $250? So get it now. And there's a lot of cool new products too, like a return of premium product, right? So if you pay for it after 25 years, if you're still here, you can say, I'll keep the insurance in place or give me back all the money that I just paid you.
All right, that's it.
Another topic.
It's so okay. Yes,
infinite banking. I heard of infinite banking. I know the wealthier use life insurance for like investment purposes.
Yes.
So let's touch that before we let you go.
We might as well. Let's open it. Let's go. Tell Anthony on the next podcast. Don't be coming. But in this particular case, this is good. This is good. Only because it's not. Go.
So a lot of financial advisors will put a life insurance policy in place, right? If you have a net worth that I believe it's over 3.5 million, then you have to pay taxes on it. So they'll put life insurance in place to make sure that their families don't have to pay taxes, right? Or they'll put life insurance in place to make sure that the houses are paid off. But there's a lot of cool ways that, the wealthy community is using life insurance to create that wealth generation that we're not, right? And then we have to stop with the GoFundMe's. I've been selling life insurance. I sell insurance for the past 6 years. So when I don't feel bad not answering GoFundMe's, because I promote this, I tell it and I educate my community. So if you have to come to me with that, shame on you.
And that's their donation. They'll try to raise $10,000 and then somebody will come in and drop $35. And it's just like, if you just did like what you're doing, like if you just did that, like that is it right there. That is it right there. Like how much is your life worth?
But the worst part about it is, how can you mourn, right? So like another topic, but then you got to worry about your wills and your trust too, because you got to have all that in place. But right, like my will, my trust, everything's laid out, right? So the money is there. Like if something happened to me, God forbid, knock on wood, hoping to be here for a while. But my family, they can just mourn me, right? Put me to rest and move on, right? They don't have to figure out, do I have to sell the house? Get my sons to go to school? Do we got to try and sell the car? There's nothing, right? Like everything's in place and it's all written down where everything goes. So you can mourn when you trying to figure out, because you think we're in sales, right? The funeral business is the sale. You want your mom to go in that casket, not this deluxe. It's going in the ground, right? Like, come on. So, right, it's an upsell. You don't need you need a limousine to drive you around. Like, it's an upsell, and the average funeral is 18 to 20,000. So unless you got 18 to 20,000 sitting in a shoebox, right? Not even something in your bank account, not your emergency fund, but sitting in a shoebox to bury yourself, then life insurance is key, right? Some people say, I can just save these premiums every month and accrue it eventually on my own. You could, right? But I'm charging you $30 and I'm going to pay out $750,000 sometime tomorrow. You would only have $30 in the bank, right? So where's the risk reward?
I love it. I love it. Listen, I could do this all day.
We're overtime. I'm sorry, fellas.
Until next week.
Part two next week. Listen, for everybody that's listening, just to finalize this is the team that that you are going to be working with. This is the team that you're being introduced to, right? And the beauty about it is that the same individuals where we share ideas, we make sure that everybody's abreast on what's going on, is the same way that when you come into our umbrella, no pun intended, when you come into our umbrella of a team that's working on your behalf, at least on the real estate side, this is everything that you're getting. So this is, respectfully, I think for the most part, it usually does start with the agent. But this is why I say that I'm more than an agent. Like, we're bringing our whole entire team, like we're setting you up just beyond that house that you're setting yourself up with. And we want to make sure that you're aware of that. So all good on my end. This is Austin, aka More Than an Agent. Shout out to my guy, Jonathan Scott of Liberty Mutual, my go-to insurance broker and provider, and Jonathan Soto, my go-to mortgage officer. Y'all good?
Good. Happy Father's Day to all the fathers. Happy Juneteenth.
Happy Father's Day. Happy Juneteenth. Happy birthday, Aiden. And shout out to my mom. Happy birthday to Mom, whose birthday's on Juneteenth on the 19th. So I got a very active Sunday. I got Father's Day. I got Father's Day. I got my mom's birthday, and so on and so forth. So gifts all over the place. So here we go. This is Austin Smith. This is the Real Estate Blueprint Podcast. Signing off.